U.S. Okay, that's the most important economy. U.S. economy expectation, according to the consensus, is that probably going to grow about 2.2% real growth. That's good. Domestic labor market has been growing, has remained quite steady. The latest unemployment number was like 5.3%, so it has already gone back to the pre-recession numbers, and it's a good thing. You talk about participation rate, whether you talk about the job creation, it has been quite positive over a long period of time, few quarters already, and it's a very good sign because that shows that the economy is picking. And U.S. economy is the most important one because most of the small economies are linked to it in different ways. Retail sales, I'll talk about in a bit as well, has rebounded, and it's a very important factor. I'll explain you why. Confidence metrics, whether it's business or individual, all has been very solid for at least a year or so. Has been above 80 and stuff. The headline inflation is something that you might want to take a look into. It remains quite low at 0.3%, where the target price is 2%. But one thing to note here is that the headline inflation accounts the energy and the food prices as well, which are quite volatile. So if you want to take a look into, you might want to look into this, the U.S. core CPI, which is the core inflation, takes out the energy and the food prices, and you would see that it's around 1.8%, so not bad. And this. Yeah. U.S. thematic. Okay. Retail sales has rebounded, and why is that so important? Is because consumer spending within U.S. accounts for 70% of U.S. GDP. So if you want to look into U.S. GDP, you need to look into the consumer spending. That's the most important thing you need to take a look into. And this consumer spending, the drivers are basically aggregate income, employment, consumer confidence, and household debt. All these drivers have been positive for a couple of months already. The reason it came down during the first quarter was because mostly the analysts attributed to the inclement weather in U.S. But if you look into the data in April, May, it has been quite good and better than expectations. So if you talk about these sectors within U.S., we prefer to be in consumer discretionary because that is the one which will benefit when the retail sales picks up. That includes recreational goods, airlines, and then consumer durables, which includes furniture and auto sectors. And so this is something you might wanna know. Yeah, when you talk about U.S., there are a few sectors that are better than the U.S., and this is what we prefer. Okay, so I've been talking a lot about these fundamentals. That fundamentally U.S. is doing pretty well, and over a long run, we still believe that the U.S. market will continue to do well. But here's something, although I don't really do a lot of technical analysis, but when you want to enter into the market, there's something you want to take a look into. And so I pulled this chart which shows a very good, the uptrend of in the market. But you will see that the slope, which was there during last year, and the slope right now, it has almost flattened. That's the MACD, and those who do understand what this indicator is about, I'll be very simple and not go into much detail. The downtrend here shows there's a divergence. There's a divergence it's going up, but then there's a divergence in this indicator, which kind of hints that there might be a kind of bearish, somewhere down right now. And you will see right now that the low here is lower than the previous low, so it's something you might want to take a look into. So when when an economist is saying that the economy is doing well, it does not mean that the market is definitely going to do well from that point of time. So you need to take a look into how the market itself is doing right now. So this is not the technical part does not suggest that it's really bullish for now. But here's the thing, if you look, the previous, these correction have provided a good opportunity to get into the market. Because if you look overall, it has been all bullish. So these corrections are a good time to actually get into the market, and that's what we believe in. So if you find any significant, and note this word, significant correction, that might be a good point to get into the US market as a whole.